Okay, thank you. Welcome to yet another class of double entry. So we'll try to see that we're able to conclude the issue of double entry, though not exhaustible. But however, I think if you follow through from my first video to this particular one, I think you'll be able to do the double entry with ease. Okay. So here on the screen, we have a transaction on the screen. We have a transaction on the screen. Please, I would suggest that you go through it, study it a bit, or probably make a screenshot and then put it somewhere while I'm posting. Then you'll be confirming with how the transactions have been posted with what you have screenshotted. Okay, so thank you. And then if you consider this channel valuable, please, I encourage you to subscribe. Leave a comment where you need an explanation. I'll be very happy to attend to you. And then also like and share to friends. Let them be part of this knowledge. Okay, once again, welcome to EduHub. So we have this transaction. It says the following transaction relates to the business of Dufan Enterprise for the month of October 2024. Now says show the double entry of the transaction below. So we have this series of transactions which you are seeing on your screen. Okay, I'm just going to go straight to it without wasting our time, and then we'll show how to post the double entry for all these transactions. So typically this is how a transaction of a business looks like. Okay, they have series of so many activities that ranges from buying and then selling and then returns, payments received, payment made, and all that. So I'm just trying to bring out a typical comprehensive transactions that happen on a daily basis in a business, or let's say in a month. Okay, so without wasting our time, let's go. First, we have for the month of October 3rd, there is purchase of goods by cash. So to show this double entry, simply we are going to have one. We're going to open the purchase account. So one, we have purchases account and then credits. Okay, so the currency sign is dollar. We're going to use the currency sign here, dollar. And then the next account for the corresponding entry, to show the corresponding entry, is going to be the bank account, because we said purchase by check. Please, if you don't make reference to find my previous video on double entry, I gave a blueprint there, comprehensive blueprint as to doing double entry. Okay, as a matter of fact, it's from the video I'm building up this transaction. So we have bank accounts. So we have the bank accounts. Also the currency sign. So here we're going to post. Okay, so here this transaction is a cash transaction, which meaning that between the buyer and the seller, nobody's owing anybody. Goods have been exchanged, payment has been made. So that's why we have the bank account and the purchases account. So we'll just go ahead and show the double entry. So in the purchases account, we show the direction of where the goods is going, and then in the bank account, we show the direction of where the money is going. Thank you. So here is just simply going to be purchases is going to be bank. And then the value of the money is $600. So it's $600. And then payment was made through the bank for purchases, which is also $600. So this is it. For every debit entry, there must be a corresponding credit entry. This is it. So that's the double entry for transaction on the 3rd has been posted successfully and rightly. Okay. So I'm using the T format. I'm not using the columnar format. So I don't really bother myself about the dates. About the date, yes. So 5th, we have cash sales. $900. So also this book, remember, all the accounts we are going to open here relates to the business. It's for Dufan Enterprise. All the accounts here, they are for Dufan Enterprise. Okay. So we're going to have 2 accounts also here now, cash and sales accounts. So I will have debits here. I'll simply have sales accounts. And then credits. So in my sales account, then the next account I'm going to have debits. We have the cash account, credits. Cash account, credit, also $sign and $sign. Yes, if you notice, I didn't close any of this account. I don't want to close it. I want to post everything first before I start closing up the account, because I'm in close account and then in the front there's other transaction that relates to the account, which I need to post the transaction in. And because I've closed it, so it makes my work look messy, and I don't want that. Okay, and we can't have two the same account open twice. Maybe let's say I want to have a bank account and I'm having another bank account again for the same business. No, it's one account that is used to operate for the business. So cash sales. So here in the selling account, the sales account gives. So I'm going to credit the sales account. We'll credit it for cash. We'll credit it for cash, which is what $900. So we have $900, and then there was a cash received for sales of $900. So this is it. For every debit entry, there's a corresponding credit entry, and for every credit entry, there's a corresponding debit entry. That has been posted also. So next is received check from Sonia. So check is an instrument of the bank. We already have bank accounts. So but the account we don't have here on the board is that of Sonia. So we'll open Sonia's account. So here we're simply going to have debit. Sonia account, and then credit. We have Sonia account, then we have credits here. So we received from Sonia. Okay, so Sonia is a giver, the bank account is a receiver. So Sonia bank $1,500. Sonia $1,500. Okay, so the bank now received from Sonia. This is a credit entry, so it has to be on the debit now, this side here. So the bank received from Sonia $1,500. That's a double entry, as simple as that. So also on the 6th, they now paid Morris by check $1,500 also. So there's a payment to Morris by check $1,500, and that payment is through the bank. So the bank is now giving $1,500 to Morris. But then we don't have Morris account here, but we have bank account here. So we'll just simply open Morris account. So here we have debit, we have Morris, we have the Morris account. Morris, so we have $sign and $sign. So Morris is receiving because banks give. So bank now gave to Morris. The bank gave to Morris $1,500. Okay, and then Morris received from bank $1,500. That's the double entry. So next is purchase equipment by cash. So if you look at it here, we have a cash account, but then we don't have an equipment account. Yes, it says purchase equipment. We will not use the word purchase because it is assumed that such equipment is bought to be used either in the business or for private use. So it's going to carry equipment. But if it's a business that deals with the buying and selling of equipment, we can say, okay, such equipment can be classified as goods, so that we avoid, like I mentioned in the first video, we avoid error of principle. Okay, so the next account I'm going to open here, I'm going to open the equipment account because already I have cash accounts. So we have equipment accounts. So we have the equipment account, and then credits. So also $sign, and then also $sign. So we bought equipment. The equipment came in, but then paying by what? By cash. The equipment came in paying by cash. So it's going to be, sorry, is it by cash? Purchase equipment by cash, yes, 500. So it's going to be cash 500. And then there was a payment through the cash for equipment. There was a payment through cash or using cash, which is what? 500 for equipment. So this is it. Every debit entry, corresponding credit entry. All right. That has been shown also. So we move to transaction for on the 10th. They say we do cash for business use. Cash was withdrawn for business use. So it means that they took cash and then put into the business account, which is the bank account of the business. Okay, so you have two accounts. The business, look at it, the business has these two accounts, cash account and the bank account. So they say they withdrew cash, they took cash for the business, meaning that if they take from the cash for business, they put it back into what? The bank account to use to do whatever the business wants to, maybe pay for a service or pay for goods or something. We don't know. But what we know is that cash was taken and then put into the bank account, which are the two major methods of payments, like I mentioned in the earlier video. So if we take cash, so it means that cash is a giver. So we have bank here. Here becomes bank. And how much was taken from the bank? We took $1,900. So $1,900. So then the bank now receives a cash of 1,900. So this is the double entry. So this entry is called contra entry. Why is it contra entry? Because this transaction affects the account of the business. Both the credit and the debit affects is played out in the account of the business. So this cash account is for the business, this bank account is for the business. So it's just a movement of cash, probably because there are shortage of cash in the bank account to make payments for whatever they want to pay for. So they have to take, but they have excess of cash, so they have to take cash and put it to the bank so that they'll be able to make payments. And whenever they have shortage of money in the business, they can go to the bank and remove money from the bank to bring it to the business so that they can use it for their day-to-day activities. So that's the essence. But essentially, when the transaction involves bank and cash of a business, it's called contra entry. And that happens as a result of either there is surplus or deficit money, either in the cash till or the bank till. So it depends where the surplus and the deficit is, then the movement is now made. So next will now be on the 11th, we drew cash from bank for family use, $500. So yes, this time around they took cash, yes, but from where? From bank. So bank is a giver. But this time around, they are withdrawing is not for the business, but they are using it for something else. It's for private use. And then the only person that can withdraw money for his family use or primary use is the owner of the business. Okay? So that is drawings. That will be drawings. So this will now be drawings. We have drawings, which is $500. Drawings, $500. So next is purchase equipment, also again on the 12th, $450 by check. So we have equipment account already, so we're purchasing. And then we have bank account also. So you just go ahead and show the double entry. And then showing the double entry here, we just have bank, and then the amount is $450. So we have $450. And then in the bank, there is a payment for equipment, which you now give equipment here. Equipment 450. So that's the double entry also. So next we have sold goods for check. So there is a sales now by check, bank and sales account. So we have the bank account and then we also have the sales account here. Okay, so we just go ahead and show the double entry. Now we're selling. When we sell, the seller receives money and gives out the goods. So bank receives for sales, while sales gives for, because there was what money received through the bank, and that would be 3,000. So we have bank. Here is going to be bank, 3,000, and then this is going to be sales, 3,000. So this completes the double entry for that transaction. So next, we'll move to the next one, and then the next one now says, return to BAS, 1,100. Return to BAS, there's a return to BAS 100. So now we have a new transaction, which we don't have any other account here. There is a return and there is a BAS. Okay? But then it was returned to BAS, so it means that BAS is receiving. BAS received whatever is returned to him or her. We don't know the gender of BAS. So being so, I would have debit. So next we have BAS account, credit, which is this and this. So in the BAS account is going to be, let me extend it a bit because of particulars. So let's say debit, we have BAS account, then I have credit. So also we have debit, and I have returns inwards. Return inwards account. The question is, how did I know? The question is, how did I know? Sorry, it's returns outwards. Returns outwards. Sorry. Returns outward accounts. Have the return outward accounts. The returns outward accounts. So the question is, how did I know? Okay. In preparing the books, that is the book of original entry of a business, there are two returns. So there is what we call sales returns and purchases returns. Okay, so the sales return is also known as return inward, and then the purchases return is also known as returns outward. Okay, so this is essentially when the buyer buys goods and return goods to the seller. The buyer, on the side of the buyer prepares a returns outward, but on the part of the seller prepares a return inward. Now they said we are returning to BAS, so BAS is receiving, so definitely it will have to come from a return outward, because the return outward is a given account while the return inward is a receiving. But since we have a receiver here, which is BAS, because it will return to BAS, so we will not prepare return inward. We will now prepare a return outward to show the corresponding credit entry for the debit entry. That's why. So we now have BAS. So the goods that was returned is by return to BAS was $100. Okay, so we have BAS. There's a return here to BAS. So BAS, goods was returned to BAS, 100, and then BAS now received from returns outwards, which is 100. That's how we show the double entry. Remember I said we always use the title of the account for the referencing as particular in an account. So next is goods returned to us by Smart and Jesse. So it's just a flip side now. Now goods are returned to us. Who are us? We are the seller. Buyers have returned. So in this instance now, we know who is returning, but then the account that is receiving now will now be returned inward, because us, seller, prepares return inward, buyer prepares return outward. But because buyers are mentioned, the buyers that are returning will just maintain the buyers' names, okay? And then the other name is not mentioned, so we'll just mention it. But if they said goods, if they now said goods returned to, okay, John by so person, so we can put the two names. All right, we can put the two names. It's okay, it's fine. So essentially here I now have return inward, I now have debit, return inward, debit. I have the returns inward account, credits, which we have one, we have Smart. If I'm not mistaken, we have one by Smart, $100, and also two, we have JC. We have return from JC, which is 150. Then we'll have debit. We now have Smart account, credit. Smart account, credit. So Smart account credits returns. So here it becomes returns inward. I'm going to have it very short. So here it becomes return inward. Okay, return inward is 100 by Smart, and then we'll debit again. We'll open for the second person to show the corresponding credit entry. So JC account, I have credits. So this is going to be also return inward, and that's 150. It's 150. But when you're doing your practice, you can expand your ledger so that you can write it complete in full. Okay, so this is how you show the double entry for this transaction. Okay, 100, debit entry, credit entry, debit entry for 150, credit entry for 150. So next will now be on the 19th. We have credit purchases from Thomas. So we have purchases account, but we don't have Thomas account. So we'll open Thomas account. So we have debit. Here we have Thomas. We have the Thomas account, credit. But then it was from Thomas. This purchases was from Thomas. So here we are going to have purchases from Thomas. And then the value of our purchases from Thomas is 250. So we have 250. So the corresponding debit entry is going to be Thomas. 250. As simple as that. So next is on the 20th, there is goods sold on credit to Rochelle. There's goods sold on credit to Rochelle. So we have sales. We have the sales account, which we'll just go ahead and post in that account. We have Rochelle. And then the goods sold to Rochelle, the value of the goods sold to Rochelle is $1,600. So we have $1,600. So here I'm simply going to have Rochelle accounts. So I have Rochelle account credit. So here we have sales, corresponding entry 1,600. 1,600. That's all. Next transaction is going to be sold goods on credit to Jones. So there is no Jones account. We're going to open Jones. So we have debits, we have Jones account, then credits. We have Jones account, then credits. So there is a sales to Jones, which is $700. There's a sales to Jones, $700, right? So in the sales account, we're going to show also the corresponding credit entry, 700. Corresponding credit entry, 700. So after that, June 22, there is a return. Rochelle returns goods, 700. So Rochelle returns goods to whoever sold to her, which is this business that we're preparing for. That's Dufan Enterprise. Okay. So Rochelle returns. So from Rochelle's account, there is a returns of 700. So this becomes returns. This becomes returns. Okay. And that is returns. That becomes our returns. And then Rochelle's returns is how much? Rochelle's returns is 700. Rochelle's return is 700, and that's returns inward. That will be returns inward. So we have returns inward. Return inwards. Okay. So that would be, we said 700. So if Rochelle returns, so here we have Rochelle. So here becomes Rochelle 700. This part becomes Rochelle 700. Okay? Is a return, we'll have a return inward. So Rochelle is the one returning. So the person is receiving the goods returned by Rochelle into the return inward book, which we have shown this and that. So number next, we have the number next is Rochelle. Rochelle cleared. Okay, that's Rochelle's return. Then there is also on the 22, sorry I skipped, 22, there's Jones paid $90 cash and was allowed $6 discount. So we have Jones. So Jones decided to pay cash $90. So there is a cash payment, where there is a cash payment of $90 by Jones. Okay, but then Jones was now allowed a discount. So if there is a cash payment, so in the cash account, we are going to receive from Jones. The cash payment we are going to receive from Jones, and then Jones, what we receive from Jones is 90. The amount received from Jones is 90. From Jones, 90. Okay. Now there is a discount allowed. So if you are receiving, you that is receiving and giving the discount, you are allowing a discount. That discount allowed, which is an expense to the business. So we're going to open a discount allowed account. So here we have debits, we have discount allowed. We have discount allowed account, credits. Discount allowed account, credits. So the discount allowed, because it's an expense, is going to be debited. So but then it's debited to the names of name of Jones. So this was allowed to Jones, and that is how much? $6. So we have $6 here. Okay, $6. So in that regard, so here the corresponding entry here will now be discount allowed. This will now, I'm going to shorten it. So we have discount allowed, which is what? 6. Discount allowed is 6. So as long as Jones account is concerned, everything is done with Jones account, I think. So we just leave that. Like I said, we're not going to balance until we finish posting all the transactions, then we can now balance. But then the last transaction, which is on the 25th, they now said Rochelle cleared her account with cash and was allowed 5% discount. Please watch. Take note. This is Rochelle. Now Rochelle, first there was a sales to Rochelle of 1,600. So briefly, I'll just do something here. So if there is a sales to Rochelle 1,600, and then because we are told that Rochelle cleared her account, meaning that there is nothing left in Rochelle's account. So if Rochelle clears account, but then there was a sales initially of 1,600, meaning that Rochelle was owing this business, Dufan Enterprise, 1,600. But out of the 1,600, Rochelle returned 700 worth of goods. So when Rochelle returned 700 worth of goods, the actual sales now made to Rochelle is now 900. It's 900. So Rochelle now decide to pay this 900. But while paying the 900, they allow Rochelle a discount of 5%. So this will now be, we'll now find the 5% of this amount, which will equal to 45. So this discount allowed become 45. So here we will now have Rochelle, which is what? 45. Are we together? So since it is 900, so this 900 now, this same value 900, this same value 900 minus the discount that was allowed to Rochelle, that will give us 855. So this is the actual amount received as cash. So this is going to be Rochelle. This is going to be Rochelle, 855 as received. Okay. So in Rochelle's account is going to be, cash 855. Then discount allowed is 45. Discount allowed is 45. So this is the credit entry, this is the corresponding debit entry. This is the credit entry, this is the corresponding debit entry for Rochelle. Okay, so I think we're done posting all our transactions. So we'll just go ahead and balance the accounts. And see how it looks. And see how that looks. So to begin with, I'll balance this one. I'll balance this account. So this plus this, I think this will give us 850. So our balance carried down is 850, and then total is 850. So our balance brought down is 850, like this. So we need to close the account. So if we look at it carefully, I think the debit side should be more than the credit side here. So our balance carried down is going to be here, balance carried down. So if we total our bank account, is going to be, this is 5,000 and it's going to be 6,400. This is 6,400. So our total also is going to be 6,400. 6,400. So balance brought down is going to be, so this plus this is 2,100, and then okay, this is 2,000, and then this is 3,450. This is 2,000, 1,500 plus 500, we have 2,000 plus 600, 2,600 plus 450, we have 2,050. So 2,050, if we remove this, we have 3,000. This becomes 3,350. Our balance here becomes 3,350. So this is going to be 3,350. But please, you can recalculate, confirm, and see. I'm not that good in math anyway, so you can calculate and check. So here we balance the sales account also. So our sales account is going to be, this plus this is 3,900, 4,000, 5,500, plus this is going to be 6,200. So our sales is 2,600. So balance carried down is 6,200. So our total is going to be 6,200. Then balance brought down is still 6,200. So we close this as usual. So these accounts are closed. So here we're going to sum up this one also. So from the look of things, I think this is 2,100. So I think the credit side should be more than the debit side. So our balance carried down should be on the debit side. So here also we're going to have this plus this, we have 2,400. So this is 2,400. So 2,400 minus, and then the total of this, if I add this total, I will have 1,755. Then plus 90, I will have 5, and then this will give me 4. Carry 1, this is 8, and this is 1. So I have 1,008 this. So I think this is going to be 555. I think. You can still confirm. You can still verify. Still verifiable. Still verifiable. So our balance brought down. Our balance brought down is going to be 555. 555. Okay. So Sonia's account is going to be balance carried down again. So 1,500, because it's 0, there's nothing there. Remember I said try follow my first video. Okay, so I'm just pinning using that video, believing that you've watched that video before this. I'm just pinning using the first video, believing that you've watched the first video before this. So also there is 0 here, so 15 minus 0, you have 1,500 as usual, which becomes the balance carried down. And I explained in the first video what how we get to manipulate our account in order to balance it to this level. So I explained in the last video. Okay, you can as well consult that video. So here we have also, here is 950. So total is still going to be 950. Then our balance carried down is 950. Then balance brought down is 950. So this is bas 100, also 100 as our balance brought down. Then balance carried down is 100, and then the total is 100. So we have also balance carried down is 100. We close as 100, 100, and then balance brought down is 100. So this account is going to close as this is 250 plus this, we have 950. This is 950. So 950 also is going to be our balance brought down. Sorry, I didn't really calculate that space very well. So balance carried down is 950, which our total is going to be 950. Then in the smart account we have balance also carried down is 100, total is 100, total 100, and then balance brought down is 100. So JC account now is going to be balance carried down. It's going to be balance carried down. Balance carried down, which is 100. Total is 100. And then our total also is, sorry, is 150, not 100. 150, 150, then 150. So we have balance brought down is 150. So here also we have balance carried down is 250, then 250, then 250, and then balance brought down is 250. So if I add up this, I think since they say declare the account, so it should be equal. So let's begin. If we add up this is 900, and 900 plus 700, that will be 1,600. So this is 1,600. Remember, we were told that Rochelle cleared her account, so there is no balance in this account. Okay, so even if you are preparing the balance sheet, the name Rochelle will not appear in the balance sheet because there's no balance inside, but the rest will be. Every account that has a balance carried down or brought down will have to have its balance extracted to the trial balance, but Rochelle will not because there is no balance in her account. She's not owing. Okay, so in this account we have the total is going to be 700. Okay, So I think the difference here will be balance carried down. So 90 minus this, we'll be left with 610 minus this, that will be 604. So we have 604. So this is 700. So our balance brought down is 604 for this account. So the next account is our discount, which is 51. So our balance carried down is 51, and then total is 51. Then balance brought down is 51. Okay. So this wrap it up for the double entry based on the transaction we have. Okay. So if you like the video, if you like the explanation, please, like I said, feel free, send in comments. I'll be glad to respond to you. Okay. And if you have any other questions or anything you are having confusion with, you can actually send it, contact me, try to reach out. I will find solution to that. We'll solve it, and also I equally send it to you. Then you see. So thank you very much for your time. Please remember to subscribe on my channel, share, like, comment. Okay, please help me to engage the channel. Thank you very much, and see you in my next video, and that will be on the book of original entry. As long as double entry is concerned, I am done with double entry. Okay, thank you once again. I appreciate your patience, I appreciate your time. Thank you, and I'm grateful.